Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. We're taking another look here at Bitcoin, helping the best practice and big picture for you, kind of just making things a little bit easier to understand, right? I like to teach people how to trade. I've been trading for over 17 years, so if you want to become a better trader, obviously consider joining and referencing our new website here. Once again, we have some fantastic signals. We are actually ranked #1 over on Cornix, just because we have consistent signals and of course really nice benefits, right? We're going to take a look at that and much more, but if you want to become a community member, Crypto Cash member here, go ahead and join. Link down below. Let's go ahead and take a quick look at our Discord too and kind of see, because there's something I wanted to try and show you here as well, is some of our trade results here recently. They're pretty awesome, pretty amazing. Take a look at this here. We got Alexandria at 172% for a short from Rose. I haven't seen the name Rose in quite some time, unless you talk about my Aunt Rose, different story altogether. We also got 183% from Solana from Ship4Crypto. So we got some awesome traders here, and it's really awesome to be able to kind of see them consistently growing and learning together. So keep up the great work. Super proud of you. That's really awesome. Keep up the good ones. Furthermore, too, we're also using 3 best exchanges in the industry: Bitget, ByBit, and of course MEXC. Bitget's nice because we get a $4,000 prize pool monthly. That does adjust. Sometimes it's $10,000, sometimes it's less. Generally speaking, the benefit there is that you get some extra cash for very little. Same thing here as well with ByBit. They have deposit rewards that are pretty massive, as well as the fact that they're going to start offering trading competitions. Last but not least, of course, is MEXC Global. They're awesome because they can offer basically leverage in the United States without any VPN. Okay, so if you're not looking to get a VPN right away, which I do still have you covered, you can go ahead and register with MEXC and have a significant benefit, but that is only available if you use the link down below. Okay, so with Bitcoin, let's talk about some moving averages here, and let's actually go ahead and go with the weekly time frame first, because I wanted to highlight something, because I touched on this yesterday, got a lot of questions for it. What does it mean when you have a golden cross? It's basically the 50-day set moving average intersecting with a 200 in upward fashion. What does that really mean for us? Well, it's a positive bullish sign in most cases. Obviously, the inverse is bearish as well. But you got to recognize that when it occurs, it doesn't just mean things are going to shoot off instantaneously, right? We had a green day yesterday, likely because we had some benefit in the market, right? Jerome Powell just mentioned, I think it was a tweet of some sort, basically saying that inflation is going to start coming down. Okay, that's all well and good, but that really led to that green day yesterday. We have a handful of other factors as to why we took a long position and took some profits too in our signals, but for lack of better terms, at this point, when you see a golden cross, try not to get super amped up. It's not just going to explode. It really just implies that that's a strong support range and that we should expect the price to not get any lower than 19,800. Coincidentally, we have a CMA gap between 19,800 and 20,500. Okay, so could still get filled. I'm just being honest with you, that could very well happen. All right, that being said, we have a support range at that area. That's positive. For lack of better terms, also, if we look at the weekly, we got an inverse here as well. We've got a potential death cross here where we got the 50 intersecting with a 200 in a downward fashion. That's basically a divergence of sorts. That really implies that we have a strong resistance level, which we know this by now, at 25,000. Okay. Again, there was a reason why that level held and rejected it previously for a few weeks in a row, because of the fact that it's a strong resistance level. Okay, so just keep in mind 25K is a strong resistance, round number of 20,000 is a strong support. Okay, so we're going to be range bound between 20,000 rather, and 25,000. Right, that little $5,000 range is a very strong likelihood we're going to see the price jump around in there for a little while. Okay, now is it going to come down to 20,000 just yet? Hard to say specifically. It does look like we have some bearish signs here today, so we'll go ahead and talk about that. But generally speaking, we're still over 50 on the RSI on the weekly. This is a positive sign. Let's take a quick peek at the monthly too, because honestly I think it's important to recognize this. We're still below 50 on the RSI, and that tells me that with the large amount of volume that we have, we are in a position right now, whereas the price action is still stuck under that resistance level. Okay, so 25,000 is that resistance. We can see it right there. Okay, so generally speaking, that's kind of where we're at here for the moment. We've got a lot of positive stuff in the overall sense of things, but we've got to recognize that we're still under some key level resistances, and 25K will prove to be a very difficult place to cross in the next few days, okay? Or weeks, months even, right? It's still going to be a resistance level no matter how we look at it. Okay, so we've established that 20 to 25,000 is the range. What does that mean for us here today? Well, take a look here at today's RSI. It's starting to taper off again, come back down towards 50, which is fine. I like to be above 50 and under 70. So this is very standard stuff. Doesn't mean the price is going to drop like a rock, but it does imply we could see further downside. We have MACD still diverging here. So even though we were drawing dead yesterday, kind of plateauing out, the price is coming back down again. Okay, and that's pretty natural because traditional markets are down by 1.5%, or half to 1.5%, and generally speaking, Bitcoin's responding the same. So 22,888. What does that mean? Well, it just really implies that this is that level here at 22,800 as a potential support. I say potential because there's no guarantee that's going to hold, but there's a strong likelihood that 22,800, if we lose that, we will see further downside. Okay, so if you have some longs open, which we have a small position open left on our Bitcoin trade we took yesterday where we took some profits, I would say let it ride because at this point we don't know if it's going to come up or down. We could very well bounce and continue higher. We still have some general bullish activities. And let's go ahead and see what the 4-hour tells us here, because yesterday it was looking fairly decent with the MACD convergence. Now we're on the horizon of a divergence, which really implies that we could see further downside or possibly lose that level of support at 22,800. Okay. We also kind of rejected off of 50 in the RSI, whereas we can see sometime throughout the evening for us here, at least us in the States, we can see the price action coming down and effectively the price is coming with it. Okay. So with us rejecting off of 50 on the RSI, for lack of better terms, we can see that we are tentatively bearish for the moment. Let's take a quick look at the moving averages though, of course, kind of get perspective here. Kind of hard to see because they're kind of squeezed in there, but we can see the 50-day SMA working as a resistance. Okay. So for the most part, we're tentatively bearish on the 4-hour. Same thing on the daily as well. So we've shifted from bullish yesterday to bearish today. What does that mean? Well, that just implies that we got to adjust and kind of anticipate the price could come down further. However, keep this in mind, we are overextended to the downside, and the likelihood of further continuation of the downside is lower, at least in the immediate future. And the reason why I say that is because, of course, we hit a 9 here at TD sequential. We have 9 straight hours of continuation to the downside. Typically, you're supposed to get a bounce and create a higher low. Instead, it created a lower low. And at this point here, we can see we're in this extreme overtime where we've got 4 1-hour candles. Basically, we're 13 hours into this push to the downside. Now, how much further can it go? It can keep going, trust me. But should it keep going? The answer is no. It should at least hold this support level and potentially bounce, or hold support and lose. Okay, one of two things could occur. The overall sentiment here being bearish on the daily and the 4-hour tells us that we could very well see the price continue lower after a period of consolidation. Okay, so generally speaking at this point, even though there is a nice golden cross on the daily, that doesn't imply that the price should shoot straight up from here. Okay, so I just want to kind of drive that home. Those things are, they're consistent and also inconsistent in a lot of ways. You shouldn't trust that they're 100%, but they kind of add, they add to the equation, right? And right now the overall sense is that the price action should continue higher, but with the recent time frame that we're looking at here, 25,000 is going to be a strong resistance level. Okay, so how much higher could it go? We could go from 23 to 25. That's absolutely correct. But there's a strong probability of a rejection at 25 to possibly come back down to retest that 20,000 level. So to me, right now, I would say wait for the price to either break below or above this Fibonacci level of 22,800 and see where we can go. Because it shouldn't, technically it shouldn't go any lower in the immediate future because we're already overextended to the downside. Okay, we take a look at a couple of other things too as well. Let's take a quick peek just at the volume weighted average price. You can see based on the volume of the last 24-hour period, we're well outside of that standard deviation. So this is full on greed right now. So whomever has the money to take right now, they're taking some significant profits because we're well outside that standard deviation. We should not be this low in the price action. Okay, so that tells me that we should see a pullback soon, likely to the upside. But once again, I don't think it's going to be sharp or strong. I think it'll be slow and steady to the right, possibly down. Okay, so again, a lot of reasons why we should be patient and wait. Because again, you can't, overtrading is the enemy, right? We want to be careful not to overtrade. Obviously, if you're a day trader, different stories, you can get in and get out. But if you're swing trading and you're opening a bunch of positions, be careful and cautious with that. Make sure you use small position size and small leverage. That's what we do as a community. So once again, if you want to become a better trader, cryptocash.tech is a site where you can learn to become a little more efficient. I have my trading academy videos that are all private on the site, and we're just all learning and growing together. It's a really awesome experience. So be sure to check that out. All right, thanks again so much for joining me here. Hope you have a great rest of your day. We'll see you all in the next one. Take care.